AAK has just released its interim report for the first quarter with a record high year-over-year operating profit for a first quarter. Fredrik Nilsson, what's your overall comment to the results?
It's another new strong quarter for AAK. We have a new record high operating profit for first quarter, up 9% at fixed FX. We also saw a very strong organic volume growth in the quarter with plus 7%, so we are clearly gaining market shares. Another positive thing in the first quarter was that earnings per share continued to grow double digit.
Is there anything that you would like to bring out as particularly successful during the quarter?
I think the positive thing is that the positive momentum we had in 2017 has continued into 2018. If we start with our largest business area, food ingredients, I would like to highlight the special nutrition and dairy, where we continue with double-digit organic volume growth, despite that we have double-digit organic volume growth during the whole last year. Looking into chocolate and confectionery fats, we were aware of that will be a little bit more challenging quarter due to the production disruption that we have earlier communicated. Despite those challenges, we were up 4% in volume growth, and we have also, if you look at the second half of the quarter, the production has run much more smooth. If we're then looking into technical products and feed, I would just like to highlight our candle business that is part of the fatty acid business, where we saw a very, very good improvement.
Cash flow from working capital was negative. What's the reason behind this?
I will say there are three reasons behind it. First of all, we saw increased raw material prices here during the autumn 2017, and with a normal time lag of 6 to 9 months, that starts now to impact in the first quarter. However, I think we have seen the worst from that already now in the first quarter. Then we are also ramping up our two greenfield in Brazil and China, and as we are ramping up, they will also need more working capital. And then number three is, of course, the organic volume growth. With that strong organic volume growth, you tie up more, particularly on the accounts receivables.
You mentioned earnings per share increased quite significantly, 15%. What's your comment to that?
I will say it's a really strong performance to improve with 15% year over year. Of course, we have a good support of the underlying momentum in the operating business. But we have also seen a good reduction of the financial cost due to some optimizations. And then the tax costs are also lower due to the US tax reform.
In regards to your company program, the AAK Way, what are some of the key achievements during the quarter?
The program is progressing pretty well, I must say, and also the sub-projects into each main projects. So that's very positive going forward. But also to further strengthen our customer development approach, we have decided to invest in a global customer survey to learn more about the customer's need. And we have also invested in important training tools for our go-to-market organization. And finally, I would like to highlight that we are also investing in a new innovation center for plant-based dairy that will be located in Richmond, California. And that the innovation center will be ready here at the end of the second quarter.